You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday. Members only workshop tonight, 8 p.m. Eastern. Have your questions ready. Thanks for joining us. Wherever you are, we're just glad to have you right here, right now. 2 live broadcasts every trading day. Work around the clock, but we actually do 2 live broadcasts. First one's our live training room. So you got to be a member to get in there or taking your 1-week free trial. Michael joins us at the top of the hour. That would be 1 p.m. Eastern. He'll walk you through step by step how to take the trial. Credit card required. Get your indicators up and indicating today. Trial will officially begin tomorrow. And it will run all the way through Wednesday because we're going to be off Thursday and Friday for the holiday. Might have heard Thanksgiving's just around the corner. Now, the live training room ends each day at 11:30 a.m. Eastern. Take a 30-minute break, then come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere, planet Earth, with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. Best way, you only have to do it once. mytradingiq.com. Scroll down the page to where it says New Broadcast. Click the link, fill out the 30-second registration form. Done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. Email, there'll be a link. 12 noon Eastern, all you have to do is click the link in the email and it automatically logs to the platform. Now, of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. Some days you'll be busy, so you can't join live, but you want to get later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFR. That's the Christian Financial Radio Network since 2005. But all you need to remember is youtube.com/CF. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived, educational, pleasure. youtube.com/CF. On the left side of the screen, you will see our schedule for each afternoon broadcast. So we're going to dive right in with our daily devotional. That's where we start. And the topic that I think we're on day 28. The topic is sharing your faith. That's a big deal. It takes 28 days. Our scripture today is Mark 10, verses 17, and I'm going to share it from the NIV translation. As Jesus started on his way, a man ran up to him and fell on his knees before him. Good teacher, he asked, what must I do to inherit eternal life? Why do you call me good? Jesus answered. No one is good except God alone. You know the commandments. You shall not murder, you shall not commit adultery, you shall not steal, you shall not give false testimony, you shall not defraud, honor your father and mother. Teacher, he declared, all these I have kept since I was a boy. Jesus looked at him, loved him. One thing you lack, he said. Go sell everything you have and give to the poor, and you will have treasure in heaven. Then follow me. At this, the man's face fell. He went away sad because he had great wealth. Jesus looked around and said to his disciples, how hard it is for the rich to enter the kingdom of God. The disciples were amazed at his word. Jesus said again, children, how hard it is to enter the kingdom of God. It is easier for a camel to go through the eye of a needle than for someone who is rich. God. The disciples were even more amazed. They said to each other, men can be saved. Jesus looked at them and said, with man this is impossible. Not with God. All things are possible with God. Then Peter spoke up. We have left everything. Truly I tell you, Jesus replied, no one who has left home or brothers or sisters or mother or father or children or in the gospel fail to receive 100 times as much in this present age, homes, brothers, sisters, mothers, children, and along with persecutions, the age to come, eternal life. Many who are first will last. Last. I'm sure you've heard this scripture preached many times, and depending upon what church you attend, churches you've attended over the course of your life, you have heard it preached a number of times, especially that part about the camel passing through the eye of a needle. Okay? Well, maybe something you didn't know or the preacher didn't expand on is that most cities had a wall around them, and at night the gates were closed. And they didn't dare open the gates if a stranger or a traveler came by and wanted to get in. So, right next to the gate was what looks like the eye of a needle. And I'm talking about a sewing needle. It has that same shape. Probably seen this in some movie somewhere, how a camel bowed down, like get on his knees. Guess what they call that? The eye of the needle. That's the camel passing through. Now, do you have to go and sell everything you own to get to heaven? Absolutely not. As for so many people miss the importance of this passage. And I'm not going to preach a sermon on it right now, but something that's stuck in your craw. I encourage you to investigate it, study it. If you have questions, of course, you can always reach me. Today we'll talk about unused bridges. Many obstacles keep people from Christ. The rich young man who came to Jesus seemed so close spiritually. He was there with Jesus, talking face to face, experiencing his love and listening to his insight. Yet an obstacle stood in the way of his willingness to trust Jesus and follow him. It was his great wealth. Incredibly, turned away the opportunity of a lifetime. Make that eternity. passed him by. As we enter into the spiritual journeys of others, we want to help them overcome obstacles that keep them from coming to Christ. But we will not always be successful, no matter how hard we try. We cannot underestimate the effect that other influences have on a person's ultimate choice. Jesus showed the rich young man the way to move beyond the idolatry of his wealth. But once the man understood the issue, he made his own decision. Follow Jesus' model, lovingly showing others way beyond, but allowing others to make decisions. Even the best bridge cannot be crossed. I encourage you to memorize this thought. Success in witnessing is simply taking the initiative to share Christ, the power of the Holy Spirit, just leaving the results to God. Let's pray. Lord Jesus, help us to hold nothing back from you. Teach us to loosen our grip on the things of this world and to trust fully in wisdom. Lord, give us hearts that follow you above all else, knowing that with you all things are possible. Lead us into the true riches of faith, obedience, and eternal life. In Jesus' name, believe and pray. Everybody said. Day. Well, things looked pretty coming out of the gate this morning, but as I suspected, they were short-lived. See it when we go to the charts. Hear it in the numbers. Start in the U.S. with the cash markets, or the indices as they're called. This is dropping as we speak. All right. Currently, the Dow is down 192 points after being up a lot. I'll show you when we get to the charts. NASDAQ's down 190 points, just 1%. S&P 500 is down 40. Russell 2000 is down less than a point. In the commodity basket, crude oil down 8 cents, trading 59.6 last. Gold down $33.90, trading 4,048.90 last. That's a drop of almost 1%. Silver down 78 cents, 50.06 last. That's a drop of over 1.5%. Asian markets at the close. The Nikkei posted a gain of 1,286 points, 2.5%. Shanghai fell 15. The Hang Seng rose 5. And in the European markets at the close, FTSE up 20. DAX up 145. CAC up 7. So we had a mixed day in Asia. It's a green day for the UK. And at the moment, it is a red radio day here in the US of A. Now the Russell's a little deeper in the red, about 4 points. The sell-off's not over. Who it matters to. See, traders look at the markets one way, investors look at it. Justice Department lawyers revealed yesterday they never presented a revised indictment against former FBI Director James Comey to a full grand jury. An unusual error that threatens to derail the federal government's case. In September, interim U.S. Attorney Lindsay Halligan presented 3 counts against Comey to a grand jury stemming from his 2020 testimony over the Trump-Russia investigation. The grand jury rejected 1 false statement charge, but voted to indict on the other 2. A separate false statement charge and 1 count of obstruction. However, instead of presenting a revised 2-count indictment to the grand jury for approval, Halligan revealed yesterday that she presented the updated charging document to the foreperson, that's the head of the jury, who signed it. He was indicted on September 25th as a result, days before the statute of limitations was set to expire. The case relates to his denying having authorized anyone at the FBI to serve as an anonymous source to news reports. The grand jury found him guilty. Reason to indict. But the interim U.S. Attorney, Lindsay Halligan, who is probably feeling pretty bad right now, missed a procedural step. Halligan went to the foreperson of the jury and said, okay, here's what we got. And the foreperson signed off on it. They're saying that it should have been presented to the entire grand jury over again. So, okay. Even if it derails the current indictment, then all they got to do is retry them. In fact, I think they should put it before a different grand jury, because so much more has come out since then. I think they'll indict him on every count. So I think you should hope they just go ahead and accept it as it is. We'll see. The Dutch government announced yesterday that it will hand back control of semiconductor chip company Nexperia to its Chinese owners, Tech Technology. Netherlands economic minister seized control of Nexperia, headquartered in the country's eastern city of Nijmegen, September. The decision followed a threat by the United States that it would place Nexperia on a trade blacklist unless the company shed its Chinese leadership. After the Netherlands used a Cold War-era law to seize the plant, China, which packages the chips, moved to block exports. Standoffs sent ripples across the auto industry as Nexperia controls an estimated 40% of the global market for a certain semiconductor that's used in cars. Honda last month was among the companies forced to reduce output due to the supply chain disruption. China lifted the export ban earlier this month following President Trump's meeting with the Chinese leader. Netherlands cited constructive dialogue with China in yesterday's decision. Frida Kahlo, you may not know who she is. Spelled K-A-H-L-O, Frida, F-R-I-D-A. Data girl named school. Anyway, a Frida Kahlo self-portrait could become the most expensive artwork by a female or Latin American artist at auction tonight in New York. Sotheby's estimates El Sueño, it's the name of the self-portrait, will fetch $40 to $60 million, potentially surpassing the $4 million woman's record set by a Georgia and a $34.9 million Latin American record held by another Halo self-portrait. El Sueño depicts Halo asleep beneath a skeleton wrapped in explosives, a nod to Mexican Easter. While most Halo pieces are in Mexico under a law barring their sale, this self-portrait is privately owned abroad. The piece appears in a surrealist-themed auction, although Kahlo rejected the surrealist label. Separately, a Gustav Klimt painting sold for $236 million, making it the second most expensive art auctioned after Leonardo da Vinci's Salvator Mundi, sold for $450. Art auction sales this week could exceed 1. Potentially marking a 50% increase from 20. Rebound market of. That's your global news. What's Wall Street got to say? Stronger than expected, albeit stale, September jobs report is muddying the picture of whether a split Federal Reserve will hold interest rates steady at its next policy meeting. It's on the 10th of December. Experts and markets are divided. According to Wilmer Stith, a bond portfolio manager for Wilmington Trust, said today they will not cut rates. While payroll growth was stronger, Stith noted that the unemployment rate on an unrounded basis was 4.44%, which could create concern for some members of the Fed, to a level of 4.5% as cautionary. Getting to that 4.5% unemployment would sort of raise their anxieties about the situation, and unfortunately, we're not going to get an unemployment rate in October. They claim the data is just lost. It's really hard to hang your hat on something definitively one way or the other. That payroll growth bounced back in September, 119,000 jobs added, compared with economist expectations for 51,000. So that was good times 2. However, it may cause the Fed to not lower rates. Don't they understand if they just lower the rates, more companies can hire more people, factories can be built, businesses can be created? Of course they understand that. Taskmasters are getting fat and sassy. All the money they're making off America's $38 trillion debt at these elevated interest rates. They want you, the American taxpayer, to take the haircut, not them. So, guess what? We may not see a rate cut until Jerome leaves. And then we'll probably get a point. Got to stick it out till then. Now, the way the market's selling off, remember we talked yesterday about how what a big deal the NVIDIA news or their earnings release yesterday afternoon was. And they did exceed expectations. And so the markets rallied on that news, but reality has since sunk in. That's why when we went through the indices today, I gave you the numbers, they're all red. Also, lower immigration is pushing down the supply of workers in the economy, putting the so-called break-even rate, number of jobs needed to be added to the economy, keep the unemployment rate steady, at a range most Fed officials see between 30 and 50,000. September print of 116,000 trumped that range. On the flip side, the unemployment rate rose 1/10 of a percentage point, 4.4%, 3%, a level it had been inching toward over the past few months. They lost the data. Oh, man. Speaking of NVIDIA, which is down 2% today, their stock jumped yesterday in after-hours trading, and today, when Wall Street opened. After the chip maker report, actually it was the news that came out at 8:30 that sent the markets higher today, but in after-hours trading yesterday, it was up. In fact, we hit the CTA long target in 2 minutes after the open last night. NVIDIA beat analyst estimates on the top and bottom lines and offered a better than anticipated outlook. Fourth quarter, NVIDIA projects revenue of $65 billion plus minus 2%. Wall Street was expecting revenue of $62 billion. Hey, what's $3 billion? Blackwell sales are off the charts and cloud GPUs sold out, according to CEO. Entered the virtuous cycle of AI. AI ecosystem is scaling fast. More new foundation model makers, more AI startups across more industries and in more countries. AI is going everywhere, doing everything at once, he added. Is that a good thing? I mean, AI is certainly fascinating. Dark side to it. Reuters, SoftBank, Japan, plans to invest up to $3 billion to overhaul an electric vehicle facility in Lordstown, Ohio. Use equipment for OpenAI's forthcoming data centers after being remodeled. The plant will manufacture equipment for data centers in Milam County, Texas, and other locations, the report said. Japanese conglomerate goes all in, startup part of the generative AI boom. SoftBank, which sold its $5.8 billion stake in leading chip maker NVIDIA, bankroll CEO Sayaoshi Son's sweeping AI push centered around ChatGPT creator AI. Purchased the Lordstown site in August for $375 million. So SoftBank sold their NVIDIA, invest in this plant in Lordstown, Ohio. They're actually going to build 5 U.S. AI data centers, $500 billion Stargate project, plan to build out a nationwide advanced AI. No stopping it. The only question is, how are you going to deal with it, especially when it comes to our kids? Home sales jumped in October as lower mortgage rates encouraged buyers to re-enter the market. Sales of existing homes rose 1.2% last month from September, a seasonally adjusted annual rate of 4.1 million. Jump came even though the federal government was shut down for the entire month, which spooked some potential buyers and disrupted closings for those using certain types of government-backed mortgages, those seeking flood insurance through a And from Bloomberg, Netflix has told management of Warner Brothers Discovery Incorporated that it will keep releasing the studio's films in theaters if it's successful in buying the company. I'll tell you what the matter. Warner Brothers has contractual agreements to release movies in theaters, which Netflix would honor, according to the people who asked not to be identified, revealing details of talks between. Up to now, Netflix has resisted distributing its movies in theaters and has grown to rival Hollywood's largest studios without doing so. Pivot on film distribution will make Netflix bid for Warner Brothers more palatable, according to Bloomberg. Shares of AMC Entertainment Holdings, the world's largest cinema chain, up as much as almost 2%. As trading got underway in New York today, shares of competitor Cinemark Holdings rose as much as 7%. Right now, Netflix is down almost 2.5%, and the others are down. All right, let's turn to Capitol Hill. The government shutdown over. It's time to get back to work on fixing America's health care. Even Obamacare supporters now admit their health plan has failed. Despite promises of decreasing premiums, the sad truth has come to light. Over 10 years in, Obamacare has become part of the problem, not the solution. Premiums keep rising, deductibles skyrocketed, enrollees have fewer choices than before, plans have become more restrictive. Now, you'll remember when the Magic Messiah said, oh, it's going to be almost free, keep your doctor. None of that turned out to be true. Sort of like most of everything else he said. While more subsidies might mask some of these premium increases, they do nothing to solve Obamacare's other problems. In reality, healthcare costs are increasing across the board. What's needed now is a plan to make American healthcare affordable again. Not just to hand out more government subsidies to more people, but to make healthcare less expensive and more accessible to Americans. President Trump's instincts are right, both on fixing Obamacare and on making the overall health system affordable to everyone. When it comes to Obamacare, Trump has floated the idea of giving enrollees their subsidies in an account they can use to buy the plan of their choice. That would be an improvement over Obamacare's current design, under which the subsidies go directly to the insurer. Now, you know who's getting healthy off Obamacare? The insurance companies. Oh, filthy, stinking. However, the process for calculating subsidy amounts also needs restructuring, as the current design is opaque, overly complex, and fuels prices. Giving people a health account empowers them to decide how and where to spend on health care, because whoever controls the dollars makes the decisions. That basic concept has already been embraced in the form of health savings accounts by a growing number of employers and workers. Indeed, a survey by the American Bankers Association reported that as of last year, there were 39.3 million HSAs benefiting 59. I got a lot more news, but I'm going to end with this one. New York City Mayor-elect, Communist Zoran Mandami, said he will meet with President Donald Trump or anyone who will help his city address affordability. Yeah, this is the guy that promised you free bus rides, free childcare, and he has no way to do it. And if he thinks Trump's going to do it for him, I think he's got another thing. Mamdani, a Democrat and self-described socialist, which we know is just a cover-up for the word communist, spoke about his upcoming meeting with Trump at a press conference in New York City this morning. Communist mayor of New York City, Zohran Mamdani, has asked for a meeting, Trump announced on Truth Social yesterday. We have agreed that this meeting will take place at the Oval Office on Friday, November 1st. That's tomorrow. Further details to follow. Mamdani said that it is customary for the mayor of New York to meet with the president given the meetings. Now, remember, part of his campaign speech spiel was he was going to become Trump's worst nightmare. I can't wait. I hope they televise this. Mamdani said that many New Yorkers voted for Trump and himself for a similar reason, because they wanted leaders to address the affordability and cost of living crisis. But see, the difference is Trump lives in the real world, like you and me. Mamdani lives in some kind of distorted communist reality, fantasy land. Never worked anywhere. Why in the world would it work? It won't. You already know that. How to be. All right, Logic 247. That's our 24/7 around the clock E-mini alert service. Currently in week 381. Over the last 381 weeks, issued over 21,000 individual handcrafted alerts. Averaged on a weekly basis is 20% or less of the alerts stopped out, based on simple market structure and the simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern. Since the markets opened Sunday night at 6 p.m. Eastern, issued a total of 50 Logic 247 alerts. Don't use those with the concierge trade alerts. They're two different animals. One never triggered. It was a dupe. That was my fault. And when she did the recap this morning, we were still waiting on the outcome of 8. Considering the sell-off, I'm going to guess some of them have. So this afternoon when she does she updates the recap. So at the time she did the recap, we had 41 actionable alerts so far this week. 10% and stopped out. Again, based on simple market structure, simple process we teach all of our passport holders. Now, last week, which was week 80, we had a total of 67 alerts, 12 never triggered, 3 stopped out, 5%. 5% of the actionable alerts stopped out. This week we're sitting at 10, but I'm okay with that. More alerts tonight. I just wanted to give Valerie a chance. I don't like to leave too many pending, okay? And this also proves my point that Logic alerts, you don't have to fall over your feet to get to your desk to place the trade, okay? I build time into the alert. Get it, study it, learn from it, draw the horizontal lines, and understand why the entry price is where it is. The initial target is just designed to help you get your goal for the day. Then there's additional targets. You need to understand what those are all about. And in the process, you learn how to read the chart. If you can't read a chart, the chance of you ever becoming a consistently profitable trader is slim. So, 381 weeks, yes, that's a very long time. But many years before we had Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different in a lot of different ways. But for the purpose of this discussion, I'll simply say they don't come out around the clock. published typically 5 minutes ahead of the Globex Open. The Thursday session that we're in right now began last night at 6 p.m. Eastern. All of our traders had all of these targets 5 minutes before the ES, S&P 500, Dow, the Russell, oil, NQ, and silver. So let's go look at the charts. That news hit this morning. Things were looking until they weren't. Until it did. This happened. Yep. Story. Okay. As you know, price always reverts to the mean. In our case, the mean is green. It's called the BBC. It stands for bull bear. Price crosses below the green line, opens and closes below the green line, bearish, and expect lower prices. But as I mentioned, price always reverts to the mean or pulls back to the BBC. As you can see, the pullback held, back held. Then we put in the low of the year on April 7th. Yeah. Our significant low. Then right here, closed above the BBC, that's step one. Then we opened and closed above the BBC. So that means we went from being bearish to bullish. And as you can see, the first version to the mean or back to the BBC held. This one. Let me just cut to the chase and say every pullback. Sometimes a pullback can last 4 days, 2 days. And learn something new this year. Pullback can last 6 days. 2, 5, 6. You see, each candle is touching C. The 6-day pullback led to new all-time historic highs today and closing. Then we got a head fake on November 7th. We had a candle, it was a Friday. We opened and closed below the BBC. That means we should be going back to a bearish outlook picture. But this was a Friday. Following Sunday night, the markets gapped big time. So here's Sunday, Monday, here's Tuesday, and then Wednesday. Following that bear signal, we got a doji. I thought, this might be it. And sure enough, look what happened. Following Friday, we also had a candle open and close below the BBC. Then retraced to the BBC and the pullback held. Gave us another leg to the downside. Yesterday, we had a little bit of a rally, okay, right up to the 24% fib extension. Then when we opened last night, we made a run up to the daily BBC, even spiked it off the Wall Street Open this morning. Or now, remember, we opened here last night. They're below the zero line on the extensions. Our next major support will be the low of October 17th, and then the low of October 10th. Then we have a couple of other minor areas, but I'm telling you, we're headed to the 20% fib retracement. That is the shallowest possible fib retracement. It's at 54.75. Now we're currently trading 65.96. 64.75, that's pretty good distance. But Some kind of miracle happens somewhere. It's going to get a lot worse before it gets better. But here's the good news. As a futures trader, you make money faster when the market's falling. It's rising. It takes financial commitment for price to rise. All it takes for price to fall is for the institutional traders to hit pause on the buy side. Michael goes over his trades with you, comes on at the top of the hour. See what an incredible day he had. Because when markets are falling like that, I mean, all you got to do, once the institutional traders hit pause on the bid side, all you got to do is just short the market. All right. All the alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. It served me well. Now, vertical lines separate today, Thursday. Here's Wednesday. Back here's Tuesday. Horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, we you still get the horizontal line. Okay? Looking at Tuesday, this low on Tuesday, just traded through it. Now we're bouncing a little bit. But when price drops to a weekly trading zone, we expect support. Until proven otherwise. Like this, like this, like this. When price rallies up to a weekly trading, expect resistance. Like this. Support, resistance, back to support, back to resistance. Over and over again and again. It's a never-ending cycle. Now, remember these CTA targets were published 5 minutes before the markets opened last night. We opened right at the weekly zone 66.95/96. Official open price was 66.97.5. And in the first 2 minutes, we ran up to the long target at 67.10. You only need 2 points to get your goal for this. So that was a sweet little trade. Price then continued on to the weekly zone above. Spent a lot of the overnight session consolidating. We had a pullback to the VVC. The pullback held. Sent us back up to the zone resistance, which sent us back to the VVC support. Then we put in this high. Now, this high. See, now this is Thursday, Wednesday, Thursday. Right? Okay, you see up here where blue turned to red? Failure to take that out. Right on it so you can see it. See how close we came? Then we failed. And that led to this. Ether wore off. Hit the top side of the long target, which was good for a bounce. Usually. Then we traded all the way down to the short target. But hit the zone here. Pulled back up to it. One of 3 things happens when price encounters a weekly zone. 70% of the times consolidation. 20% of the times rejection. 10% of the time slice. That's when price slices through a 30-minute candle, slices through a weekly trading zone like it's not even there. Runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. Now that did not happen here. Okay? It did here. And this is what happens most of the time, more often than not. Dow. This was the open last night. And by the second 30-minute candle, we'd move to CTA long target. Then the step line crossed blue and timing, the black step line. See how on the way up it's on the left side? It crossed over. What does that mean? It means price is probably going to pull back to the BBC. It did. So we consolidated at the BBC. The 8:30 news came out, and we ran all the way up to the zone at 46,940/45. Now remember, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone. Change. That zone you see down there, 45,470, that is this week's lowest weekly trading zone for the Dow. Even if we spike it, trade below it a little bit, by close of business on Friday, expect price to be at or above this zone. Now, 14th of next month, it will make 16 years that we've published the weekly. How could it not be beneficial to have that kind of information days in advance? Maybe it's just me. Now, stop falling, and I can't go back. But if you go to your trading view chart and you scroll way back, you'll see where the support came. There's a reason over here. No, don't trust me. Look, find it. Let that be your first step in learning how to chart. Russell. This was the opening candle last night. We opened right at a weekly zone. Ran up. Step line crossed. Just came back to the BBC and the zone. Opened. Consolidated. That's what happens 70% of the time. Then 8:30 news came. And baby, all the way up to the long target candle. We hit the zone. Barely consolidated there. Market was on fire. So we got up there. Right there. See how we took it out by just a little bit? If I scrunch it up a little more, it might be more information. Actual high. It is basically right there. Look at the high of this candle here. Got to know to expect potential resistance. How far back do you have to look? Well, obviously, looking back Wednesday wasn't enough. Tuesday wasn't enough. Monday wasn't enough. Failed right there at that important price, important area. Boom. Now where are we? Sitting on top of the weekly zone at 2335/36. Still down below. It's at 2249/22. So the Russell's holding up better than the other markets for now. The NQ. This was the opening candle last night. Made a good run, but it took until midnight. Now we almost hit the zone here. But here's the issue. Once that step line crosses blue, should be expecting a pullback to the VBC. So we did hit the target, and we hit it again. Pull back to the zone, which we expect to be support. Otherwise, now the 8:30 news didn't have quite as much impact on the sent us up to here. Right there, where blue failed to take it out. Failed to take it out. Or you take it out by just a little bit, it's not good. Now we're sitting on top of support at 24,370/71. One more zone below at 23,386/87. Okay. Oil. Where we opened last night, popped up to the zone resistance, sent us back to the BBC support, sent us back to the zone resistance, sent us back to the BBC support. The pullback held here, here. All the candles are touching it. The candles are touching it. It's holding. Get a leg and a retracement to blue climbing support. Get this little double top going on. And another pullback to the VBC support. Made a run at the long target, but we didn't get there. The high was 60.10, so we missed it by 5 ticks. So I got to try. Then something happened. I don't know what. This happened at 11 o'clock. There had to have been some kind of somewhere. Send it that far down. Took out these lows. Right there, you see where red turned to blue? Today's low. Oh, was the open last night. Now, second 30-minute candle. Above the BBC. Got blue and climbing below. So, this candle opened. Call it 40.89. And up $1,800 per contract trade. That one 30-minute candle. $1,400 per contract. Consolidated. A couple hours. Dropped to the short target, which bounced us back up to the BBC resistance. Sent us back down. Didn't take out that low. Failed to take out a low. Look for right to the zone. Zone published Monday morning. Resistance will always send the market looking for support. It found at the top side of the short target. Now we're bouncing up, okay, to the BC, but we got red and falling overhead. Sell off probably ain't over. Pick up with the final market silver. When I come back, Michael's going to give us a recap of what happened in the live training room this morning. Then do trading as time permits. View platform. By the way, the Thanksgiving special at TradingView officially begins tomorrow. 80% off plus 1 month.
That's significant.
That is a very significant offer. So
You got to buy the annual though. You got to be on. Well, you got to buy the annual. If you already have an annual, you can still buy that discount. It'll just add a year onto your whatever you have.
Tack it on the end.
Yep.
Okay.
So,
all right. Your screens look good.
Excellent. All right. Well then, let's get started. Just looking at everything getting butchered here today. Oh, excuse me. Good afternoon, everyone. Today is Thursday, the 20th day of November, 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com and click on the purple button. When you click on that purple button right here, it's going to bring you to this registration page. We'll change this tomorrow, but it's going to bring you to this registration page. And on this page, all that we ask for is your name, your email, and your phone number. Down at the bottom, gives you TradingView login ID. If you haven't given us that yet, you got to give us that so that we can set up the indicators on your charts. You got them indicating on your charts. That's where you want to be when you start the trial. All right, when you hit register on that, we'll know that you did it, and then we'll set you up. All right, we get a lot of automated emails. In those automated emails, there's a lot of links in there for Telegram channels and things like that that you guys really ought to pay attention to. Because you end up asking the questions later, how to get into these Telegram channels and how to get into Telegram altogether. If you're not using Telegram, it's a free app and you should really use Telegram. Go to telegram.org and sign up for it. If you're not using it with us, there's a bunch of other places that use it. So eventually you'll probably be needing it. Telegram.org. All right. Today is the 20th day of November, 2025. And we had a really good day today. I wasn't feeling that way at the beginning, but we ended up that way. On the NQ, we're up 150 ticks. On the YM, we're up 14 ticks. On the gold, we're up 111 ticks. It's been a little while since we had over 100. I guess it hasn't been. I guess gold has been pretty active. Okay, well, it hasn't been that long. We had 111 ticks on gold. It seemed like a lot. And 78 ticks on the ES. It's been a while since we've had 78 ticks or more on the ES. It looks like it has. It's been a few months. Yeah, 68, we're all the way back into there. Now we're into August. Look at that. That could be our best day of the year, possibly. All the way back into April. Oh, wow. Yeah, not this day. April 11th, we had 259 ticks on the ES. Okay, well, I guess we blew it out of the water then. We're not going to beat that. 259 ticks is the record. But today we had a pretty good day. And I was happy with the results at the end of the session. We're up $2,905 per contract. This morning it took, it took 7 minutes and 2 trades to get to $1,000 a contract, and we took a total of 54 trades this morning. So, and today we had 3 stop outs, so we're killing it today. Now, we're not getting a whole bunch of break evens. I guess it still show the same thing. Bumping it to break even plus something doesn't make this number any bigger. So we had 94.4% today were break even or better, and most of them were better than break even because I have most of the DOMs automatically going break even plus something. Well, 2 out of 4 anyway, go to break even plus something. I actually changed the NQ DOM to go to break even plus 4 ticks, break even plus a point. Okay, because I was getting too many of those one tick trades, and I figured if it's gonna come back, I'm gonna have to come back and give me a whole point. All right, so on the month now we're at 15,542. That's over 10 business days, averaging $1,554 per contract per morning session. Now we only have 4 more business days in this month. So if we have 4 more days like today, that would be outstanding. I don't expect that we will have 4 more days like today, but I don't know. I don't know what's going to happen. Anyway, we're averaging $1,554 per contract per morning session for the 10 days that we've traded this month. On the year now, we're at $246,355. That's over 200 business days, averaging $1,231 per contract per 2-hour business day. I want to keep that number over 1,200 by the end of the year. That's my goal. And hopefully get this number up to that number. That would be a nice achievement. But I don't know. That's just a matter of the speed that we get the goal for the day. So it depends on the markets, what they give to us. But speaking about that, if you were to quit trading when you get the goal for the day, following the 24/20 blueprint and add 1 contract per month or 1 contract for every $2,000 earned per contract. So far this year, if you did everything just like me, you'd only have to work 27.68 hours on the whole year. You'd be up $194,702, averaging $7,033 per hour per morning session. All right. That is that. So let's get into the actual trades. So if I flip this over, this side of it, we had a lot of trades on every single market today. We had over 10 trades on every market. So I'm just going to start with gold and work my way across. Now, before I get into that, let me just show you this. Dwayne, I'm sure has talked to you about this, but this morning we were up here. And I was saying this morning, if we get up here and this holds, this is my projection for into next week. We should be down here at 64.64, roughly 64.64 by the end of next week is what I was thinking. If the BBC ended up holding, and it did, then 64.64 is what we should pull back to. Now, I had this other projection all the way up here. If it didn't hold, this is one that I gave a couple weeks ago. This projection over here that I gave a couple weeks ago. If it didn't hold, it was going to go up to here by the end of next week. Okay, because this is pretty much the same thing. Now, even if it does hold, if it does end up breaking back up above the BBC, this is the projection. It's into December, first week of December to get up to this level, 7,073. That's just using basic fib stuff. Dwayne goes into a lot more detail about all that and a lot more precise measurements. Mine are just big generalities. All right, so let's look at the gold today. Okay, I'm going to scroll all the way back here. All the way back here. There's a lot of bars in here. There's a lot of bars on every one of these markets today. Every market today has a lot of bars on it. There we go. All right, so on gold today, we started out with a really nice trade, 25 ticks on that first trade right there on gold. Bang, that was really nice. Then we had a stop out right after. Bang, right back down. Now that was a mess up on my part. I should have had my stop at break even on that. There was a break even there, and I stopped out on that, and that put us down to we went from 25 to 26, then down to 11. So there was a +1 tick somewhere that got us to 26, and then there we went back down to 11. Then we had a 1 tick that got us to 12, then a 10 tick to 22, a 20 tick to 42, and then a 1 tick right here. Now that wasn't a valid trade because this hadn't gone all the way, hadn't finished the cycle. So I missed that one up, but I got 1 tick to 43. And then the next one, this one was a big one. We got 25 ticks on that, up to 48. I'm sorry, 68. 68, then 1 tick there to 69. Then 20 ticks to 89. 10 ticks to 99. 10 ticks to 109. 1 tick to 110. And somewhere in there is 1 more tick. Here it is, right over here. 1 more tick to 111. And that is where we ended it on the morning session for gold. So there was, well, there was a lot of movement in gold today. And during the break, it's like this right here is where it came out of the overbought right there. If you took that, you might have stayed in it all the way over here and got some profit out of it. Okay. And this right here would have been tough to take right there. That's, I think, Jimmy, if Jimmy's in here right now, I know he took that one. Joan, earlier Michael was directing you to go. Yeah, and you logged off and you didn't. Yeah, I know, I saw you logged off, so I stopped explaining. I'll tell you in a few minutes, okay? All right, so this one, I know Jimmy had said he stopped out on that one right there, and there's nothing wrong with that trade. That was a valid trade right there, and I would have taken it. And if I had my stuff on the automated break-even stuff, I think it probably would have bumped my stop to break-even because my buy stop limit would have been waiting at the top of this bar, which I'm trying to, the high on this was 9.2, so we've been waiting at 9.3. And then the open on that was 9.8, so it would have gone to break-even right there, and then it would have taken me out with +1 tick. Or break, I think I have the goal to go to +1 tick, so it would have taken me out with 1 tick right there. Jimmy, I know you're not in here right now, but that's how that would have worked out for me. I know he stopped out on that one. And then he took this one right here, and it gapped down. It was a similar situation. The low on this was 66.5, and the low on the bar right after it was 66. It was a similar situation. That would have automatically bumped my stop to +1 tick. And the second or two that it took for it to happen, it actually took 11 seconds. It would have been enough to get my stop there. And in the final one right here, this had a low of 65, and the next one only had a low of 65.5. So this was a low of 65.5. This was also a low of 65.1. So that would have stopped me out, probably. My stop would have been 15 ticks away. It would have eventually stopped me out. I wouldn't have gotten anything to break even on that one. But so those were 3 trades right in there that I know Jimmy said he had been doing really well with gold until he hit those 3 stop loss right in a row, because I'm guessing he didn't have his stuff automated. Doesn't have his stuff automated. And the automation does help in those cases. It really does. But if I didn't have it automated and I took those trades, I probably would have been licking my wounds and writing down my results on this one by the time that one happened. And I don't know. I might have gotten them manually. I might not have. I might have had a better entry or a worse entry. It's hard to say. Anyway, moving along. This right here was an okay trade to take. This right here was an okay trade to take. Nothing in there was okay. Nothing in there was okay. This right here was an okay trade to take. Nothing in there was okay. Or there. This was okay. That would have stopped you out. That was the first stop out. That would have been okay overall. That would have been good. That would have been straight right there. That would have stopped out. That would have been all right. That would have been good. That would have been good. No, I'm sorry, that would have stopped out. That wouldn't have been good. That would have been a valid trade, but it would have stopped out to the tick. That would have been a break even. Nothing in there. Nothing there. That would have been good. That would have been good. That would have been good. That looks like it would have stopped out to the tick. So you can see there were a whole bunch of trades in here. I don't think I'm going to have time to go through every trade on every market because there's just so much movement. Running through them really quick. That was a trade. 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 So a lot of long trades. That was a trade that would have stopped out. That's the first one that would have stopped out. That was a trade. And that was it on the gold. So that brings us to where we are now on gold. We finished on gold this morning with 111 ticks. So we killed it. Now the YM was our nemesis for most of the morning. We hit control and back on this. The YM was our genesis for most of the morning. There we go. We started out with a positive trade on the YM. So our first trade of the session was right there. We picked up 5 ticks on that one. And then we stopped out to -10. We had a break even. And a +1 to -9. And then, yeah, then there's a stop out in here after that +1 to -9. There's a stop out in here somewhere. Not exactly where that would have been yet. Been there. there, would have been there. Oh, yeah, this looks like a good place for it. It was the top out. I think it was right there. For minus 15, that could have been minus 24 overall. Then we had a +1 to 23, then a +5 to minus 18. That was minus 23, and minus 18, then minus 17. Then we had a +10 to get us all the way down to minus 7. Then we started to get into the positive numbers here, almost at the end of the session. We went from minus 7 to +3, then 3 to 8, then 8 to 13, and there was one more that went from 13 to 14. And that was where we wrapped it up, +14 on the YM. Okay, so it kind of, at the beginning I had my number. I had that stop out, and then it was the first stop out and the second stop out, and then it was like a whole bunch of one-tick trades for a while there until the end of the session. It came back alive at the end of the session. So I'm sure there are a whole bunch of bars in here. Yeah, I'm sure there are a whole bunch of bars in here that would have caused trades. There was one right there. Scroll through very quickly. There's one right there. One right there. One right there. There. I'm going in the other direction. Back in the red. Right there was one. Going back in the green, nothing. Back in the red, nothing. Back in the green, nothing. Back in the red, right there. Right here. Back in the green, nothing. It's this one right here. Nope. Back in the red. Nope. There's one right there in the red. That would have stopped you out. One right there in the green. That would have stopped. No, that would have worked out fine. That would have worked out fine. I had a big gap up right there. Get back in the red, and you need a flat spot. This right here would have been okay on the green. That would have been a short on the red. That would have been one right there. That would have been okay. And that would have been there. Would have been break even. It looks like been nothing after. Nothing there. That looks like it would have been a trade that would have stopped you out. There aren't a whole lot of stop outs in here. There's a lot of trades, not a whole lot of stop outs. That would have been an okay trade. And flip back around, that would have been a good trade. Well, we're only at 12:30. I'm not going to go through every single one of them. There are a whole bunch of trades in here. Okay, I'll stop saying the words good trade. I'll just say trade. Trade. Trade right here. Trade. Trade, no trade. Trade, no trade. Trade right there. Nothing through there. Nothing through there. Trade there. Trade there. 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 Not there. I did make a nice run up here while I've been doing this. We had a big run up here on the YM. And nothing through there. And that was it on the YM. So there were a bunch of trades on the YM. It was our nemesis at the beginning, but it ended up being okay at the end. We ended up positive 14. Wow. I'm running out of time. I'm not gonna get any trades off. Let's just go through the ones that actually triggered. Okay, we'll skip the stuff that I missed during the break. And Joan, I'll try to get you started too. I can. Look at all the bars on the ES, going to 1030 right there. Okay, so on the ES, our first trade was a +1, then +8 to 9, break even, then went from 9 to 10, 10 to 18, 18 to 19, break even, 19 to 20. This wasn't one because it didn't hit the mid. It didn't come out of the overbought, and it didn't hit the mid. But I don't know what the heck I did. Oh, I remember now. I took that on the wrong market altogether. That was supposed to be an NQ trade, but I took it on the ES. I got one tick there, I think. We went from 18 to 19 there, 19 to 20 on that one. 20 to 32, 32 to 50, 50 to 66, 66 to 70. I skipped a couple of the 66 to 70, 70 to 7, 70 to 78. So there's one missing here. I think this was actually 70 to 78. I missed one right in here. But anyway, we ended up with 78 ticks on the ES. Let's see, I can go all the way to the end. I'm not going to go through the stuff I missed on that one, or the NQ, because the NQ is going to be a million too. So go back to the beginning here on the NQ. Yeah, we're not even at 12 o'clock yet. All those bars. All right, here we are. All right, our first trade on the NQ, we picked up 15 ticks. That's where we got the goal for the day. We had 5 ticks on the YM and 15 right there on the NQ. Then we went from 15 to 39, then 39 to 43, then 43 to 47, and 47 to 55, then 55 to 104, then 104 to 108, then 108 to 112, then 112 to 120. Those are ticks, right? And from 120, somebody went from 120 to 132, and then we stopped out. We went down to 96. And then went from 96 up to 146, and 146 to 150 was right there, right? And that is what we ended up with. Now, the bracket that I was using this morning on the NQ was a 36 by 50 bracket. I know I got a 39 range. I was using a 36 because I was using it on the 31 range, but I kept the same bracket on. And that's why my stop out was 36 ticks on that. Okay. It kept me in all the other trades though, which was nice. And now we'll see if we can trade a little bit. But Joan, how much do you have done right now, Joan, as far as the Sierra charts go? Do you have your Sierra chart account logged in? And where is your brokerage? Is your broker StoneX? Because all that matters. Oops. I was getting ready to take a trade over there on the NQ, but then it went up instead of down. StoneX, okay, well, then there's stuff that you can do from the web page. If you go here and you go to trading platforms, there are things that you can do in here. If you follow the instructions in here, you got to go to Sierra, get your Sierra account up. Then you're going to have to get the connection between Sierra and StoneX. So you're going to have to send this to StoneX. All right, just copy and paste that and send it to StoneX. They're going to send you a link. All right, the turnaround time is usually pretty quick. It's got the email address right there. And just copy and paste this. This is a PDF, so you can just open it up and copy and paste it. They're going to send you a link to create an ID and password for your Sierra chart connection. It's going to be the web API
You got to have a Sierra account.
Yeah, you got to have the Sierra account. Yeah. So start with that, get the Sierra account, but then you're going to have this thing in here, this right here, CQG Web API. Now, they're going to give you a link to create a password and an ID for that. My best advice in that is, you know, the portal that you have for StoneX, you have a password and an ID for that. Use the same password and ID there.
I use the same one everywhere.
Yep, use the same password and ID there, so it's the same across the two platforms. And once you do that, then you'll be able to connect the CQG Web API to the Sierra Chart platform. You got to create this Sierra Chart account first. So follow these instructions right here. Just go to Sierra. I think they start out there. Yeah, see, it says right in here. Go to Sierra, create account right here. And create the account. And then once you have the account created, it goes through some other stuff that you're gonna have to do in here. But I'm gonna have to sit with you, and it's gonna take like an hour to get this done, right? Okay, so I'll have to set up a meeting with you, and we'll get this done. I mean, it stinks. It was like almost a year ago that we found out that we're gonna have to we're not gonna have DT Pro anymore. It was almost a year ago now. We found that out. They were telling us it was going to be December sometime. They're going to shut it off. Then it was going to be January sometime. They're going to shut it off. And then finally January 31st, they did. So I had to go through with everybody individually and set them up. So I don't expect you're going to be any different. We're going to have to do it individually, okay? You and I will have to set up a meeting and get that done. But you can do the beginning steps. Now this video that's over here is the video that's on the trading platforms page is out of date, because we've had stuff that's happened. You can be normally right now in your portal, right now on StoneX, you probably pay exchange fees on the portal in StoneX. You're probably paying something a month. It's either, you know, like $7 a month or $39 a month for depth of the market. It depends what you chose, but you're going to stop paying that, and you're going to have to start paying it at StoneX. Now you see it's the 20th of the month. It renews on the 1st of every month. So it doesn't matter when you actually start paying it at StoneX. It's going to cost you whatever you decide to do. I mean, not at StoneX, at Sierra. You're going to have to start paying it at Sierra. Stop paying it at StoneX and start paying it at Sierra. That was the thing that they did about 2 months ago. They found a loophole that we had apparently been working in that we didn't know about. They found this loophole and they cut us all off. And because they wanted to get the exchange fees instead of StoneX getting the exchange fees. Because, you know, the actual exchange fees are like $7 to get depth of market, and they charge $39. StoneX does the same thing. But they weren't making that profit on us, and they wanted to do it, so they cut us off, and now you got to do it through StoneX. So there's a couple of hoops you got to jump through there that are not in this video. But you can't get a lot of the basic stuff done in this video. Okay, and there's a connection that you can make in the data trade service settings. I don't remember which one of these connections it is, but one of these things will give you some sort of data that you can actually at least show you connected and get your DOMs working and stuff. Okay, but that's what you're going to have to do. Start out with that video, get a Sierra ID created. You're going to have to pay $36 a month for Service Pack 10 for the Sierra stuff. That's in that video. Okay, you're going to have to do that. And if you get the full depth of market, the whole thing ends up costing like $75 a month. If you get the full depth of market and all that, it's going to be $75 a month.
Since it's already the 20th, you may want to wait till December 1st. Because if you pay Sierra today, they're going to bang you again the rest of the month.
Yeah.
They don't prorate it.
So if you did it on the last day of November, you'd have to pay it again on the first day of December.
That's a flaw in their business model.
No, yeah, they don't think it's a flaw, I bet.
No, well, you know, it could, yeah, I guess not.
It's just something we have to suck up and do. All right, well, all of that fun, and I've run out of time, and I haven't placed a single trade. but
I'm in no hurry,
that's okay.
so.
Yeah, I am. I got like a million things I got to do today.
All right.
So let me show you all. Let's see, are there any trades right now that might trigger? This went full cycle. That's not going to be one. It's not flat. This didn't go full cycle. This didn't go full cycle. This didn't go full cycle. So there's nothing right on the edge right now. So yeah, I'll just wrap it up for today. So if you have not taken a free trial with us and you want to, go here to mytradingiq.com, mytradingiq.com, click on the purple button right here. Once you click on that, it'll bring you to this registration page where you got to fill out this form. Once you fill out that form, we'll know you took the trial. We'll get your indicators indicating on your desktop, get you into the room in the morning. Now, if you fill that form out today or tomorrow, you have all of next week, as well as what's left of this week and the weekend. All right, so if you get on that now, you get a little extra time for your trial. Partners meeting tonight, 8 p.m. Don't forget. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready. Excellent.
Okay, recap of the session.
Today, Dwayne, it took 7 minutes and 2 trades to get to $1,000 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, the only market we haven't covered yet, we've covered everything in granular fashion. Once I sign off, you can go to youtube.com/CFRN and watch today's broadcast in its entirety. Here's for silver open last night, and in the second 30-minute candle, it had second 30-minute candle open at 50 at 16 and up cents, $1,000 per contract. Then resistance right here, you see we have cross. That's what the target was based on, cross from yesterday. Shot it by just a little. It's high, basically this high. That sent us all the way down to the short target. Support, which bounced us up. Zone, resistance, which sent us back to the short target. Support. And then we managed to get red and falling, turn to blue and climbing. So we hit resistance, back to support, back to resistance. This time we traded C. Now we're attempting a retracement back. Futures dipped below this retracement. We can get above the BBC and get back. Continue the big. Here's what the day looks like. Had a big green candle. We spiked the daily BBC off that news this morning. First, last night we had there was a lot of bullishness due to NVIDIA earnings release expected. So the markets popped in after hours trading based on that. And of course, Asia got to trade it, and then London got to trade it. So off the open and the news this morning, the markets were substantially higher. That is very bearish, okay? Got a candle on a daily chart. Spike the BBC, and now look where we are. Okay? Even if we close right here, right now, that would be very bearish. I suspect we could. I don't see any reason for the rally between now and the close of the session. By close of business tomorrow, potentially be at the 20% fib retracement. About that for months. It's like might be close. This is the closest we came back here on October 10th. That was the 6-day pullback that held. Led to all-time historic intraday and closing highs. Now, resting right now on the zero line extensions. if we do go down to the 24, I may go from regular fibs to reverse fibs. Okay, and that time comes, I'll explain to you the difference. When you're in a bull market like we've been most of the year, draw your fibs from the low high. But when things turn bearish, you draw your fibs from the high. I'll do that live in real time here, if and when the time comes. So as far as there being a Santa Claus rally this year, it could still happen. I mean, we could make this drop in a couple days. A couple of days like this. One day like that, and we're at the 25% retracement from where we are right. Good news is you're invested in a ETF like Spider. You don't have to worry about the sell-off, because over time the indices are all, that's how index funds, that's how they're designed. You got all of these really smart people over Standard & Poor's constantly running the numbers on all the 500 up the S&P 500. One of them shows weakness, sent packing, and a new, fresh, strong company. So they're constantly reshuffling the. That's why indices always go higher over constructed. And now, if you become a person of a certain age, you have to be more aggressive. But if you're young, 20s, all you got to do is open an account, a few shares of the Spider, feed it, whatever you can afford. You don't have to buy a whole share. $50, throw $50 at it. But you got to be disciplined. Dollar cost average, you got to be disciplined. 20s, by the time you're 50, somewhere. Man, I sure miss that guy that used to be on the. It's a true story. Anyway, again, we covered all the markets in granular fashion. I'm not going to run through them all again. Targets were hit. Yes, even trying to recover. From where we're sitting now, got kind of a double bottom. Spiked it. But I suspect by business we just may take out this low. Still one more zone below. So that's down at 64.27/28. Remember, once the zones are published Monday morning at 6:15 a.m. Eastern, carved in stone for the entire week. They don't change in any way whatsoever. Next month on the 14th, that will mark 16 years. Publish the weekly zones. So get on board. Want to become a member? Email Valerie, support@cfrn.net. Let her know that you're ready to become a member. You heard that there might be some kind of special, something to do or something. She'll explain it to you. She'll send you the information you need to manage of the special. Become an official passport holder. Once you become a member, 2 hours of live training every. On top of that, private one-on-one mentoring. No extra charge. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder, it's all markets and all. This is not just for future. Exact same indicators, the exact same strategy works for stocks, crypto, ETFs. How's that possible, you ask? This price flows the same across all markets and all time frames. Resistance, back to support, back to resistance, over and over again and again. Never-ending cycle. It's simply how markets work. Now, you'll get the Logic 247 alerts around the clock. That's what's going to teach you how to read the chart, which is important. You need to know where to expect potential support and where to expect potential resistance. Over the last 831 weeks, 7 years, we issued over 21,000 Logic 247 alerts. Averaged on a basis, 20% or less being stopped out, based on simple market structure and the simple process we teach all of passport holders. Last week, we ended the week with 5% stopped out. And as of the recap Valerie did this morning at 6:30 a.m. Eastern, at 10% stopped out. Along with the Logic 247 alerts, which teach you how to read the chart, you'll also get the concierge trade alerts, typically 5 minutes each day before the markets open. Monday morning at 6:15 a.m. Eastern, you'll get trading zones. Thursday night, you'll be able to attend the members workshop. That's tonight, 8 p.m. Eastern. Square. Everything a trader needs, all under one roof. I know most of you spend a lot of time in Treasure trying to learn how to trade. That's what they all say, right? They are. They don't just hand you some indicators on a PDF and wish you well. We're in the trenches with you. Sunday night at 6 p.m. Eastern, Friday afternoon at 5 p.m. Eastern. 2 hours of live training every day, private one-on-one mentoring, round-the-clock support. Not find that anywhere else, I assure you. All right, let's wrap it up with our good day. God wants to work you. You. Part 1. The Lord said, persuade Ahab to go. 1 Kings 22:20. There's an amazing story of how God works. I saw the Lord sitting on his throne, all the hosts of heaven standing by, on his right hand and on his left. The Lord said, I will persuade Ahab to go up, that he may fall at Ramoth Gilead. So one spoke in this manner, and another spoke in that manner. Then a spirit came forward and stood before the Lord and said, I will persuade him. The Lord said to him, in what way? So he said, a lying spirit, mouth of all his prophets. He said, see what's happening in heaven? Could be called a business meeting. God wants to rescue Israel from its evil king. He's open to ideas. Spirit or angel proposes to mislead the king through his advisors. God not only approves, but promises him success. Earth, prophet Micaiah warns Ahab that his advisors have been misled. The king chooses to listen to them anyway. Boldly marches north against Syria, dies in battle. The story shows you a clear correlation in heaven, simultaneous events. Yes, God can act sovereignly without our help. He also chooses to work with beings, just like you and me. He has a to-do list. It's called His will. My will, but I used to know a band. They were called Will Be Done. Spelled W-I-L-B-Y. Second word. Get it? They were pretty good They took a lot of cover songs and turned them into Christian songs. They covered a lot of popular rock songs. They turned them into Christian songs. They changed the lyrics. There with the song, you knew the melody and all that, but the changed. They called it saving songs. Anyway, here's the bottom line. God's looking for people prepared, able, ready, and willing. Yes. Should your response be to just simply pray? Whatever you want done today, it's me. That's our good word today. Thanks so much for tuning in. Who you are, wherever you are, God continue to richly bless you, mercy, and with His grace. I'll see you.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.